Now, let's talk about managing your money using a bank account. If you already have a bank account, good job, good for you. You're already ahead of the game. I know a lot of people who prefer to keep their money in cash, but I always suggest at least having a bank account and then deciding if you want to use one later on. If you don't have a bank account, what you should do is start looking up credit unions first, and then maybe also some online banks. I know everybody's credit situation is different, so you want to get in contact with different banks, see what their rates are, what their loan rates are like, what their account rates are like, and just find what works the best for you. Credit unions are a good, safe bet for a lot of people. The downside is a lot of their account types don't come with accounts that make a lot of interest, but they are very reliable. Okay. So, going based on what we were talking about before, we have our income, our bills, our bullshit spending, and how much we want to save. Okay. This is now starting to gear us up for when we talk about how we're going to make our money work for us and make our money make more money for us. So another one of the good things about having a bank account is it's your accounting, it's your budgeting, it's your investing, and your automation all in one. So a bank account gives you a statement of all the transactions that you had over a period of time before. That's your accounting. You can set it up so that it will help you budget and plan for the future. All right. And so how we want to do this is the first account that you want to have is you want to open up a checking account. This checking account, you're going to set this up for your direct deposit, right? From your job, whether you get paid weekly, twice a month, or you're on a salary, whatever that is, you want to set that up so that you're getting that money deposited to a checking account. And I know that some of us have businesses that we run. We want all this income going to a checking account. Now, possibly if you have two jobs, one of them being an entrepreneurial business and the other one being a job where you are hired under another company, you might want to have two different checking accounts for this because, tax purposes and things like that, keeping everything together. But we do want to have a checking account. Next thing we want to do with this checking account is we want to set all of our bills up, our rent, electricity, everything else that comes out monthly at a certain time that is due. We want to have that on automatic withdrawal so that we don't have to think about it. That's the automation that I'm talking about. So if your rent's due on the 5th, you want to set it up so that automatic payment is coming out, maybe anytime from the 1st to the 4th, so that you don't get to the 6th of the month and be like, I forgot to pay my rent. Same thing with your electricity bills. I know with some electric companies, they'll let you set the date. So if you want to pay for your electric bill on the 10th, the 15th, the 20th, you can do that. You just have to talk to them and figure that out. Also, with doing automatic payments, some companies will give you discounts for doing that. That might be your car insurance, that might be your internet or your electric. If you set up automatic payments, they might take $5-10 off your monthly bill. So now you have your checking account set up. Usually checking accounts come with some interest rate. They're pretty small, but something is better than nothing, So you got your checking account, you got your income going into that, you got your automatic bills coming out every month, right? $4,000 in, $2,000 or less out. Now we have our savings, money that we're going to save every month. What we say, $1,200 we want to save. We want to open up a savings account for this, all right? So when you get that $4,000 in, you're going to go ahead and move $1,200 to your savings account, right? That savings account is going to earn you more interest than your checking account is going to earn you. And that money is just going to sit there, it's going to compound. What we want to do is we want to calculate 3 times our monthly bills, right? So if we have $2,000 in monthly bills, That means we have a $6,000 total over 3 months. This first savings account is going to be called an emergency fund account, right? What we're going to do is we're going to put all our savings amount money there for the next $6,000 we need to save up, and we have $1,200 a month that we're going to be putting into our savings account. So it's going to take us 5 months to save up 3 months of bill money. So for the first 5 months, you're going to put your whole $1,200 into that savings account, right? And that's going to sit there. Now, what's going to happen after you get that, after those 5 months with that savings money, is where it gets fun. We're not there yet, all right? So you got your checking account. Now you got your savings account, right? Depending on the bank that you got, or maybe you could find something online, you can find what's called a high yield savings account. So a typical savings account will get you about maybe 2 to 3%. A high yield savings account will get you about 4.5 to 8%. So over the course of a year or two or longer, that's a big difference, right? Why would you only want, let's say you got $100. Why would you want $2 of that 100 when you can get 8, right? That's a $6 difference. Rich people are taking advantage of that $6 that you aren't getting, that they are, and they're doing a lot with it, right? And we'll get into what you can start to do with that money soon. So open up a high yield savings account for your emergency fund money, if you can. If you can't, a regular savings account will be a good start while you start to look for where you could get that high yield savings account at, right? So you got checking account, savings account. Now you're going to open another checking account, or some credit unions have what's called a CashPoint Global account, right? So this third account is going to be for your spending money. So you're going to put that $800 in spending money, or that 20% of your monthly income, into this one account. Or if you want to have it in cash, you could do that too. But you should have 20% or less into a separate spending account or wallet, whatever you want to do with that. And like I said, we want to keep that bullshit spending as low as possible so that we are keeping money every month. If you have big purchases that you want to make, let's say you want a game system, you want to get somebody a gift, whatever, that stuff is supposed to be saved with your spending money. So if you're going out to Zaxby's or Ruth's Chris or McDonald's or something like that every day, and you're spending $50 to $100 there every month, that's $50 to $100 that you could be saving up for something else. That money should not be coming out of your emergency fund money. That money should not be coming out of your checking account that stores your income and your bills. That money for that big purchase comes out of that checking account for your spending money. If you spend all that money every month, you ain't got nothing to save up for. All right? So hopefully you're making enough money every month to buy that big purchase whenever you want it. Okay? But that's not how a lot of us are living. We need to save money up for big purchases. So we got checking, which stores income and takes out bills. We got savings, which stores our emergency fund money. And then third, we got our checking account, which stores our spending money, which we should also, get out in cash if that's how we want to do as well. So like I said, everybody's bank works differently, right? So one part of your job is going to be, you want to look up some banks that's near you that you can access in person, because you might want to start building a relationship with some of the people that work there, because they can suggest ways for you to start making your money, make more money. You want to look up some banks that are near you. You want to go open up that account. That account is going to help you start to see where your money is going and how it's coming in. It's going to help you start automating your payments that you owe, and it's going to help you start planning for the future, right? That's going to do a lot when it comes to helping set you up for the future, okay? So we've done some accounting, we've done some budgeting, and now we're setting up our bank accounts. So this is the foundation for what we need to do to help our money work better and more efficiently for us. So the next thing that we're going to do is start to take the money that we have that we're not spending on bills. We're going to use that money to make us more money. All right. So hopefully you all enjoyed this video. Go ahead and like, If you know somebody that might find this useful, go ahead and share it with them. And please go ahead and subscribe, okay? Once again, thanks for watching. And then check out my next video where it's going to be about making your money make more money for you. All right, I'll catch y'all then.